right. Well, this is one of my favorite segments, and I've been doing this just as long as ASCII, I feel like, or maybe a little bit shorter, but Wealth Wednesdays. My partner, Stacey Tisdale, is here with me.
It is an honor to have been doing this with you this long. I can't believe what we've done.
And it's important work. And today we're really excited to do some credit counseling 101.
We all need that.
It is National Credit Education Month. And who better to sit with us than Barry Coleman, the Vice President Education National Foundation for Credit Counseling. In other words, the NFCC.
Right. And the NFCC actually started National Credit Education Month. So we really have the expert. And yes. NFCC, Barry will tell you what they do, but among other things, they provide free credit counseling, which is one of the reasons we wanted to have them here with you all to close out National Credit Education Month. And starting with that, Barry, why don't you tell us why your organization wanted to highlight March for Credit Education Month, why thought it was important to do that, and what do you think of where we kind of stand with credit right now in this country?
Yeah, so the NFCC promotes financial education across the country in all areas that we serve. And we felt it was important to highlight credit education because we feel that oftentimes there's misinformation that is available, and oftentimes people may not have a thorough understanding of the importance of credit education to their everyday lives. And so we help to create Financial Education Month to highlight the importance of credit education and to encourage consumers to learn as much as they can about how to handle their credit in a responsible manner.
All right. Well, we're excited that some people wrote in some questions actually from our listeners. But before we get into that, let's just talk about the importance of credit in a person's life. Sometimes people feel like debt is not a good thing. And if I can't pay for it with cash, I shouldn't do it at all.
Yeah, I would say, credit is an instrument that can help consumers in their daily lives. We don't believe it should be utilized in every situation, but obviously there are situations where credit can be important and it can be an end to a means. Certainly, most people can't pay for a home in cash, so mortgage loans, most people can. Mortgage loans are important. Cars can be very expensive, and so that's another area where credit is important because it helps someone to obtain that vehicle that they can use to get back and forth to work and such. Credit card debt oftentimes is where we see individuals run into trouble. It's very easy to use, reach into your wallet, pull out a credit card and pay for a purchase with that credit card. And what we find is over time, as the interest accrues, it becomes sometimes more difficult for people to repay for those particular purchases. So individuals that consider using credit cards should think about the cost over the term of that particular purchase. If you're buying something that's $1,000 and you pay for it with a credit card and you make the minimum payments, well, you're paying a lot more than $1,000 for that particular item. So they really need to step back and think about, okay, is this really worth this $1,000, $1,200, $1,500 that this item may eventually cost me because I put it on a credit card?
We know people, particularly in our community, they're sometimes using credit cards just to make ends meet. I think according to the Federal Reserve, more than half of Black and Hispanic Americans have poor or no credit. And when it comes to consumer credit, like credit cards, that makes up over 44% of all debt for Black consumers. So where does the person who's sitting on 5 figures in credit card debt, but they're only earning $50,000, $60,000 a year, where do they begin?
I think they begin by developing a plan. I mean, obviously, they don't want the burden of this credit hanging over their heads forever. And so they need a plan to address just exactly how they're going to go about paying this debt. I mean, obviously, most of us have goals and aspirations, and sometimes, having too much debt can be a hindrance to those goals and aspirations. And so in order to reach your goals, you want to be able to address this credit in a structured way. And certainly, speaking to a nonprofit credit counselor could be a good place to start. As Angela mentioned, our agencies provide credit counseling sessions typically free of charge. And we sit down with consumers to help them to develop a plan of action to address their financial situation and come away with education that will help them to spend more wisely and to use credit more wisely.
Can we talk about these higher interest rates too, since we're talking about getting our debt under control? We've been hearing a lot about that with what's happened with Silicon Valley Bank, Signature Bank. And how does these higher interest rates affect the average person?
Yeah, they certainly have an impact on the average person, especially if someone has credit card debt and they're carrying balances every month. So just to put this into context, the average interest rates on credit card debt have soared to nearly 20% from just over 16% at the beginning of last year.
Wow.
And that's the largest one-year increase
That's a lot.
in 4 decades since those rates have been tracked. Now, this partially influenced by the Federal Reserve's increase in interest rate over the past year or so, and that was designed to help put inflation into check. We all are familiar with rising costs of everyday things. And so the Federal Reserve has really one strategy when it comes to reducing inflation, and that's increasing interest rates to sort of slow down spending. Now, the Federal Reserve doesn't directly dictate how much interest someone pays on credit card debt, but the Fed rate is the basis for the bank's prime rate. And in combination with other factors such as credit score, the prime rate helps to determine the annual percentage rate on a credit card. And most credit cards are variable interest rates, meaning they fluctuate as there are changes in the market and changes to the federal funds rate.
In addition to that, all of the scrutiny banks are coming under right now because of Silicon Valley. They're going to be tougher on people when it comes to giving out loans and credit. And that's one of the reasons we wanted to talk to you today, because it's really more important now than it has been in a while that you have your credit situation straight.
Yes. That is certainly causing credit issuers to look at their operations, look at their lending criterias, and to determine whether or not they are open to adverse risk. I mean, the situation with Silicon Valley is that they were open to risk. Interest rates had a big impact on their operations. And as such, regulators have been scrutinizing these financial institutions, especially those that appear to show some significant risk. And so as a result, lenders are going to become more cautious when it comes to their loan terms and such. And so they may tighten the requirements in order for someone to be issued credit. And that's why it's, to your point, utterly important that consumers make sure that their credit profiles are appealing to lenders. And that's, making sure that they use credit in a wise and responsible way, and that they pay their bills on time if they have credit instruments now. That is so important. And it's something that our organization stresses quite frequently.
That's why
Speaking of on-time bill payment,
yes.
Angela and I are founding partners of a credit building initiative called Stellar Fi. And one of the first things we did was within this organization say we wanted to partner with the NFCC because you provide free one-on-one credit counseling to StellarFi users. That means when you just go to StellarFi.com, which helps you build your credit score by we pay your bills on your behalf. We report those payments to the credit bureaus, and that on-time bill payment is what helps your credit score so much. We've had a lot of our users see a 40-point jump in 1 month. So we got a couple of things to break down there. But first, tell our audience how important on-time bill payment is to their overall credit.
Yeah, so on-time bill payment is the number one factor that is used to determine one's credit score. It amounts for 35% of the overall credit score. So when someone has credit and they make their payments on time, it positively influences their credit score. If they're late on payments and start missing payments, that's where it's going to adversely affect the individual and their overall credit score. So it's the number one factor, amounts for 35% of the overall credit score.
And I won't lie, I was just showing Stacey my credit score, and my credit score just jumped incredibly just because one of my old, like I didn't pay a bill on time, and it was like 5 years ago, and it was just really a few days late, but it really affected my credit score. So now my credit score jumped up over 30 points. You know,
wonderful.
From that,
yes.
I guess it dropped off.
That's the kind of stuff you help people do, right? When someone comes for these one-on-one credit counseling sessions, she did it herself, but that's one of the things they look for, right?
Yeah, that's one of the things that we help, by, first of all, providing that education so folks know what impacts the credit score and, stressing the on-time payments. And there are some situations where individuals will come to us and they're burdened with credit card debt, and they're having problems making those minimum monthly payments. And we have a tool called a debt management plan, which is a structured repayment plan where the consumer would make one monthly payment to us, and then we disperse those payments to the creditors. Those creditors have offered reduced monthly payments and interest rates to make the repayment more affordable. But what happens when that consumer makes their payment through us, we send those payments to the creditors on a monthly basis. They're establishing that on-time, payment history, and over time, that's going to help greatly in improving that overall credit score.
And doing things like helping people check for errors on their credit reports.
Make sure you get your credit report and know your credit score and all of those things.
Yeah, so consumers have available the opportunity to get one free credit report from each of the three major credit reporting agents, Experian, TransUnion, and Equifax, on an annual basis, so that they can review that credit report, look for errors, dispute things that are incorrect. Now, I will say the annual credit report that's free does not include the credit score. So oftentimes those credit bureaus will offer the credit score as an add-on to that free credit report, but it's usually a nominal fee. And the important thing to note, though, is that the credit score is created from whatever appears on that credit report. So it's important that credit report is accurate. It's important that consumers work to improve anything that may be detrimental on that credit report, because that's going to have a direct correlation to the credit score.
And it's a good way to make sure nobody's using your identity.
Identity theft.
That's why you have to, because sometimes people have no idea. It could be a family member or a stranger. That's why you need to make sure you check. And we do have some questions from our listeners that we want to make sure we get to, because I know, first of all, thank you, Mr. Coleman, for joining us today. But our listeners are really excited. They have some great questions.
Yep.
Wonderful.
Okay.
And just before we jump into that, I wanted to say that with this partnership, when you sign up for getstellarfi.com, before you even pick a plan, you get a credit. We give you a free credit report, and you get a free one-on-one credit counseling session. That was very important to Angela and I. So you can go to getstellarfi.com to sign up for that. And until Friday at midnight, if you use the code WAYUP, you will get a $5 credit for signing up for one of the plans after you link the first bill. So this is just till Friday at midnight, and you can go to getstellarfi.com.
A free one-on-one counseling session with the NFCC, and your credit score will go way up.
Yep, and that's one of the reasons that we really wanted to partner with you all. Our first question is from John Brown, and he wants to know, how badly does being 1 day late on a credit card payment affect my credit score?
It could adversely affect the credit score. Typically,
1 day.
One day it could. It all depends on the credit issuer and how they report that that late payment to the credit bureau. Some of them will give you a little leeway, and if you're more than 30 days late, then that's when they start reporting. But 1 day late could actually theoretically affect someone's credit score in a negative way.
If they want to be a jerk. And then they should
Yes,
call you
yes.
they'll call you like 1,000 times. I'm not going to lie. I'm still bitter about this one because mine was like a week late. I really just forgot. And I don't know, I don't
It
think you can.
happens.
Yeah. I just forgot.
happens.
I think I didn't get the email because I do everything online and I didn't
Sure.
get the email. And then it was on my credit score for so long.
Yeah.
It's forever, like 5 years.
Yeah, and I think some of them drop off faster than others. So it dropped off on my TransUnion, but it's still on, on Equifax and on Experian.
Yeah, those negative actions on a credit report can stay on the credit report for up to 7 years. Now, they impact the score lesser over time. So if you had a late payment reported, say last month, and another late payment that was reported, say 2 years ago, the one that occurred last month will have more of a negative impact than the one that happened 2 years ago. So over time, it factors in less.
See, if you would have had a free one-on-one
Yes,
credit
I
counseling session,
would've.
they would have done that for you.
And I didn't know
Sure.
because I wasn't even checking my credit report, which is why I'm glad I do now. I make sure I check it every single month just to see what's
She was
on
just
it.
checking it. I'm not kidding.
I did.
It's very important to do. I mean, think about all of the situations of fraud that occur
So many.
nowadays. Yeah, I mean, it's happened to me, and the fact that I was able to catch it early, I was able to actually do something about it.
See,
So
it could
that's
happen to
really
him.
important. Yeah.
Vice President of the
Yes.
NFCC. It could happen to
It
you
does.
also. Okay.
It does.
Exactly. You got some more questions?
Do I have them?
Here.
I don't have them here. You have them.
You get those ready, and I'll get the ones that are being texted ready.
All right. This one is from Uncle Jay. Does medical debt get reported to credit bureaus?
Yes, medical debt can be reported to credit bureaus. There's been some talk about changing laws so that medical debt does not have as much of an impact on someone's credit as it has in the past. But it can be reported to the credit bureau. It all depends on really the medical provider.
Mm-hmm.
Some will and some won't. I would say situations where that medical debt has been turned over to a collection agency, those are probably times where you're going to see it reported to the credit bureau. And collection accounts have an even more of an adverse effect on someone's credit.
So once they start threatening you with this is going to be sent to collections, you have to
Yes,
make sure.
That's when it hurts your
You wanna-
credit.
Before
wanna
they
act.
do that.
you want to act. And I found that most medical providers, if you call them and talk to them and you work out arrangements, then they won't report it in
Right.
a negative
That's
way.
what people freak out at medical bills because usually they're so huge. But they
Sure.
don't carry interest in most hospitals and stuff. They just want to get paid.
Right.
Exactly.
So if you call them, that's like it's not good debt, of course, obviously, to be in
Yeah.
that kind of situation. But it doesn't cost you interest, so don't panic. Call.
Just try to work it out.
They'll work it out.
Yeah,
They will.
work
They
it
will
out.
always work it out.
I can speak to all these things because I've been in all these situations. Okay.
And I think that's an important example to follow too. If someone's experiencing issues with debt, no matter what type of debt it is, if you act on it sooner rather than later and be proactive and call your creditors and talk to your creditors, many of them are willing to work with you.
Yeah.
And oftentimes you can, avoid any negative consequences if you're able to do that.
And mentally, it can be really hard when you have all these people calling your phone and you're out and you're like, who is it? What number is
Yes.
this calling me? And then you're like, hello. They're like, hi, can I speak to? And then you have to disguise your voice to pretend you're not you. Nobody wants to have to deal with those things.
Stories about this.
Yeah.
That was
Yeah,
when
this-
we spoke yesterday, Barry.
Yes.
One of the thing about the counseling, you want to stress to people, it's a judgment-free zone.
Right.
Absolutely. We understand that things happen and people experience situations sometimes that cause them to get behind on their bills and may damage their credit. We're not there to judge anyone. We're there to help. We don't care about the past as much as, okay, what can we do to help you to move forward? And so all of our counseling sessions are confidential. They're non-judgmental. we're there to help and to be supportive. And, we get a lot of pleasure out of helping people. And so, we always encourage folks, reach out to us. Let's see what we can do to help you.
All right, here's another question from Carly. How do you build credit with no credit history?
Yeah, you have to establish credit history over time. And, that may be, finding a credit issuer that's willing to, give you credit. Sometimes, store credit cards are somewhat easier to get. There are secured credit cards where you put a deposit down with the bank and they issue you a credit card based on the amount of your deposit. And as you make your payments, that's how you build your credit history. So there are ways to do it. And certainly, you mentioned the Stellify product. The Stellify product will look at some of the less traditional types of bills and report those to the credit bureau. So that's another way that
like
you can
Netflix and
Right.
Yes,
child
absolutely.
support.
Gym membership.
Yeah,
Yes,
the
yes.
point of Stellarify was it seemed like a paradox that you had to have credit to build credit.
Yes.
And the whole, the founder that, Angela and I totally adore and, set out on this journey with, he wanted to find a way that people could get credit by using bills they already have. So
Sure.
everybody really check that out at getstellarify.com. But we got more questions.
I think you have them in your phone now. I got these.
Okay. We have...
And you know what? Along with that one, establishing credit, what if, like, say I have a credit card and I add somebody to my credit card, will they then get my credit history?
Yeah, as an authorized user, if you add someone to a credit account as an authorized user, they could gain the benefits of your positive credit history. So yeah, that can help.
Okay.
Watch that with your boyfriends and your girlfriends.
Yes, be cautious. Be cautious about that.
Yeah.
But that's good for parents, I think, with their kids
Yes.
too. Like if you want to help your child improve their credit score and you trust them and you have a
Yes.
plan, then that could be something that really does work.
Absolutely. Yeah. I hope my son's not getting any ideas from that. Not happening.
Get it, Chris?
Okay, we have a message. I'm really messing up this name. Chelamundo. What happens if I stop using a credit card overall? Does it hurt me?
Not necessarily. I mean, the only way that it impacts is that there is no there are no charges that are occurring on the credit card, so there are no payments that you can benefit from making that positive payment history. But overall, it doesn't hurt you. As a matter of fact, if you have a credit card, and let's say that credit card, has a $2,000 limit, and your balance is zero, that's actually helping because it's showing that your credit utilization is low, which is one of the other factors that influence a credit score. So if you can keep that credit utilization, they say, I've heard below 30%, but I think even lower than that is better.
But
So
don't cancel the card, right?
Yeah, don't close them. Just don't max them out. Keep them open. Yeah.
Because does it affect your credit negatively if you cancel a card?
It can, because what happens then, it affects the overall credit utilization, because that credit limit is no longer counted in your credit utilization. And also, if it's closed, then it could impact your length of credit, because that credit account that may have been open for years is no longer calculated in that credit score. So your length of credit shortens, which has a slight impact, not a huge one.
Okay.
What, this one I can't even read. This is another question.
Okay, what's better, a double payment before the due date or one big payment on the due date?
It does. It really doesn't matter. And here's why. Credit bureaus issuers report to credit bureaus typically on a monthly basis. And so, if you're making multiple payments, it doesn't matter, as opposed to making one large payment. I would say, though, the benefit to making a larger payment is that you're making the payment before there's an opportunity for that additional interest to accrue on that account. But as far as how it impacts the credit score, there's there's minimal impact.
I've seen people talk about that when it comes to their mortgage, and I think the only reason is they do that instead of a monthly payment. I think they do like every 2 weeks because that just makes it an extra
Shortens their
payment
mortgage,
or something like that. But
Yeah, it saves
it-
interest. You
yeah.
pay the loan off quicker because you don't have a higher balance that the interest is accruing on,
Okay.
and you do wind up making an extra payment every year.
This question, something we haven't touched on, but it's, of course, as my phone went off, people don't realize you also offer services and counseling for businesses. And
Yes,
this person
yes.
had a question about what can they do to shore up, what is the best investment to make with your business credit?
Okay, so the NFCC does have a small business owner counseling program, and I'll tell you a little bit about that, and then we'll delve into that question. So this program is designed to assist small business owners who have used personal credit to fund their businesses. And we know that happens quite a bit.
I know.
But what
We do
yeah,
I've been
yeah,
through
it
all this.
happens.
Okay.
It's hard to
Sometimes-
it's hard to separate.
It really is. It really is. But oftentimes what happens is because that business owner has done that, they quickly find themselves struggling to handle that debt. And so we sit down with them and help them to try to untangle, the personal versus business income, expenses, and debt. And the whole idea around that is because it sets the person up to be perhaps a more appealing risk to issuers of business credit over time, because they can show their profit and loss, a lot easier, and they don't have that negative personal debt stigma, or on their credit report. So in order to prepare themselves for business credit, you've got to start by making sure your personal credit and your personal debt is handled responsibility. So I think that's probably one of the single most important factors for someone that has personal debt but not yet business debt. Making sure you handle your personal debt, you get on the right track, you're keeping your records separate, and setting yourself up so that you can perhaps apply for and obtain business credit at some point in the future.
And you help people do all of that.
We
Yes.
help with that. Yes, we do.
Where can people go, by the way? And I know with Stellarfi, we have our program, we have our partnership with you. But just if
Sure.
people want to learn more about the NFCC, where do they go?
Absolutely. So they go to nfcc.org and they can connect to one of our member agencies through nfcc.org, based on the type of counseling service they're looking for. Is it credit card debt? Is it small business owner debt?
Even home ownership.
Home ownership, if they're interested in that, if they're having problems, paying for their home, if they're having trouble with rent insecurity, student loan debt, we help with all of that.
And with that in mind, just a final point to talk on understanding where you're starting from and understanding your financial situation is where it all begins, correct?
It's so important because if you don't know where you currently are, it's hard to determine when you will get to where you're trying to go. And so understanding where you are allows a counselor to help you determine what options are appropriate to help you reach your financial goals.
And make sure you guys go to Get Stellarfi. That's where you can go and sign up for Stellarfi. GetStellarfi.com. And the promo code is way up.
Right, and that's Friday till midnight, and you get a $5 credit for the first bill that you link. But just by going to GetStellarfi.com, you get your credit report and you get a free one-on-one counseling session with NFCC with a real live person, and we felt that was very important to help get rid of some of the stigma around this.
All right.
Absolutely.
Well, thank you so much for clearing that up. I know right now with the news and everything that's been happening with the banking industry and interest rates and even still things that are happening from the pandemic, we're still seeing those repercussions. There's a lot of misinformation out there, but it's great to hear it from you firsthand, Mr. Barry Coleman.
Well, you're certainly welcome. I'm glad to help.
Thank you so much for joining us. And everybody, you can also go to teamwealthwednesdays.com
That's
and take
us.
the pledge. And you get a free weekly Wealth Builder newsletter that'll have all this information on it. You just go to teamwealthwednesdays.com and take the pledge. And another free resource that we offer is Wealth Wednesdays for Entrepreneurs Facebook group. And we will have information about Barry, NFCC, and Get Stellar Fi and all of those things as well. We are really trying to help and make a difference.
All right. Thank you so much.
Thank you.
Thank you.